sell me this pen.
The whole sell me this pen narrative is really, it's a test that you give to a salesman to see if they really understand what selling's all about. The key to selling is to find out, step one, what are your clients' needs, values, what pain are they looking to resolve, what do they need?
Wolf of Wall Street investing for beginners. When the phrase Wolf of Wall Street pierces the ears, millions of people across the globe instantly remember the 2013 blockbuster movie going by the same name. Based on Jordan Belfort's memoirs, Martin Scorsese's 2013 film The Wolf of Wall Street depicts the unlikely rise and dramatic fall of the Long Island-born stockbroker. The film, which divided critics and audiences, was a financial success and received 5 Academy Award nominations, including nods for Scorsese and lead actor Leonardo DiCaprio. Believe it or not, The Wolf of Wall Street is based on a true story. After scandals and a stint in prison for securities fraud, Belfort has reinvented himself as a motivational speaker. And one of his primary topics is the distinction between greed, ambition, and passion on Wall Street. There are priceless investment lessons that inspired the film. In this video, I will highlight some of them that can definitely be of immense use to beginners. But before I begin, with a yes or no in the comments, tell us, have you ever watched the movie Wolf of Wall Street? Now let's pick some lessons. The movie The Wolf of Wall Street follows one of Wall Street's most infamous brokers, Jordan Belfort, who makes a fortune by defrauding investors out of millions. Directed by Martin Scorsese, the film starts with Belfort as an entry-level stockbroker at a Wall Street brokerage firm, where he is schooled on the cutthroat selling techniques. After a major market decline, he loses his job and goes to work for a small business selling penny stocks. After discovering the higher commission on penny stocks, he establishes his own firm, Stratton Oakmont, where he sells penny and IPO stocks with speculative returns. Jordan builds a business empire by presenting himself as a polished entrepreneur and training his employees on effective selling techniques. He's soon living the high life and becoming one of the major players on Wall Street, but soon discovers the dark side of success when he blurs ethical boundaries, quickly falling into a world of crime and corruption. Yet, for individual investors, films like The Wolf of Wall Street offer important lessons that should not be overlooked. Here are some of them. Number 1. If it's too good to be true, it probably is. Jordan Belfort made hundreds of millions of dollars through a pump-and-dump penny stock scam. This is different from the older and more illegal methods of selling shares of non-existent companies, since the companies that Belfort's firm persuaded investors to invest in were all real companies. Penny stocks are stocks that trade under $5 in the over-the-counter market and not through one of the national exchanges, such as the NYSE or NASDAQ. Since the market capitalization, stock price, and daily volume of these stocks are pretty low, they are highly vulnerable to being manipulated. For example, a sudden large volume purchase or sale could cause the price to pop or drop by triple digits in a single day. Belfort's pump and dump idea was simple. Have his firm accumulate shares in these thinly traded companies, stash the shares into secret accounts, and cold call investors to convince them that these companies were potential multi-baggers. The influx of buy orders would rapidly inflate the price, convincing investors that the stock was rallying. However, it was just an opportunity for Belfort's firm to unload its shares at a considerable profit. Once Belfort unloaded his position, the stock plunged and demand dried up as investors trampled each other to dump the plunging stock. Belfort was eventually convicted in 1998 for securities fraud and money laundering and sentenced to 22 months in prison for defrauding investors of $200 million. Belfort was only ordered to pay back $110.4 million. Today, there are plenty of websites and newsletters recommending penny stocks. Unscrupulous firms out there are still trying to replicate Belfort's pump-and-dump model. The best defense for everyday investors against these financial predators is to remember 2 things. First, if a firm really believes that a stock will shoot to the moon, they won't likely share that information with you via phone call or email. And secondly, understanding simple stock market fundamentals such as market capitalization, volume, revenue, and earnings growth can help everyday investors weed out these potential scams and find solid investments. Stay alert. Number 2. Always be suspicious. Be careful to who you entrust your money. Who are they associated with? There are serious professionals among the smallest firms, just as there are bad apples in companies with a great tradition. In an interaction in Australia in 2014, Jordan Belfort said this: "I would never give my money to a no-name brokerage firm or a financial advisor who is not affiliated with a major company. I'm not saying there aren't crooks in big companies, but to go with someone on the basis of a phone call or someone who's operating from a business that's very recent, you're taking a huge risk. That alone is a telltale sign." Number 3. Information on a firm must be solid and clear. Before making a decision, it's always good to do some research. Those who work well do everything in the open, and it shouldn't be difficult to retrieve information or confirmations on the way they behave and do business. Those who advertise only on performance but remain opaque about everything else, starting with their investment process, are suspicious. If they have even a partially shady reputation, run the other way. Number 4. Ethics. If you lose it once, you lose it forever. When it comes to money, there's no in-between. If you pass the limit once, there's no turning back. In his interaction in Australia, Belfort was explicit. Either you're lily white or you're not. If you cross the line once, you get a taste for it. You can't say, "Oh, I'll make my money and then I'll become a pillar of society." It doesn't work that way. I didn't start out ethically bankrupt. I sold my soul a little bit at a time. I crossed over to the dark side through a series of tiny, imperceptible steps. Number 5. Beware of exclusive groups. The oldest technique in the world is to flatter. My clients are exclusive, but you can be part of them. Bernie Madoff did precisely that, and paying to enter an exclusive group is already a red flag. Belfort calls this the oldest hustle of all, the classic con. You wanted to be in Bernie's club, and if you weren't in Bernie's club, you were less than. People clamored to give their money to Bernie Madoff. If you asked questions, he said, No, take your money back." Number 6. When it's business, leave your emotions at the door. This is an extremely vital lesson to be learned when it comes to investing. In the movie, Belfort tells all his salesmen that to sell stocks, they must quit being sentimental or empathetic towards the buyer. He says we must look at sales as a purely transactional relationship and not care if the buyer profits from it or not. Similarly, when you save your money in a savings account, shares, or other deposits, you shouldn't get emotional about those finances. You should look at your money from a purely objective stance and analyze which source will make you the most profit or give you the higher return, and invest accordingly. Number 7. Work until your bank account looks like a phone number. This statement shows pure ambition. Belfort tells his colleagues not to stop working and earning till their bank account balance should look like a phone number. He seeks to instill a sense of desire among his colleagues. This directly correlates with the financial practice of investing your money. We should be as ambitious as Belfort in our bid to multiply our money. There's no magic number when you should stop. Even if you're financially strong enough to fund your retirement, money should always multiply. This gives you a financial cushion to take risks and create opportunities for people around you by the trickle-down effect. Number 8. Give them to me young, hungry, and stupid, and in no time, I will make them rich. Here, Belfort tells us about his recruitment policy. He says he wants inexperienced people who show a strong desire to learn and grow, and believes he can make them rich in no time. Money and investments also work in a similar way. You need to spend enough time doing market research, see which opportunities are new, identify their lucrativeness, and invest wisely. More often than not, it's not about investing in reliable sources because they can't give you exponential returns. A newer and promising investment has a higher chance of multiplying your money many times over. Number 9. 97% of people who quit too soon are employed by 3% who didn't. Through this dialogue, Belfort shows his employees the value of sticking with a job even in tough times. He says that the 3% of people who stay with a firm through thick and thin are the ones who often reach higher management positions, as compared to the people who frequently shift. This principle works really well with money. This shows us the importance of locking in our money and reaping the benefits of the maturity period of an investment. When you lock your money in a fixed deposit or stocks of a company for a long time, due to the power of compounding, it's more likely to grow than if you take it out and keep investing it in multiple sources for short periods of time. Number 10. Hard work beats talent every time. In this powerful speech, Belfort tells his employees that hard work is always more important than talent. You can be blessed with talent, but it's no use if you don't cultivate it by working hard. He says talent only gives you a head start, but if you genuinely want to succeed, you need to work hard. Similarly, when you make an investment portfolio, you need to diversify your investments. If you earn or inherit a lot of money but fail to invest it into the correct channels, you're likely to exhaust it. Hence, you must always aim to expand your investment portfolio in hopes of greater returns. Number 11. You can watch me, mock me, try to mock me, but you cannot stop me. This is a very pivotal lesson from The Wolf of Wall Street. Jordan has huge successes, and he also has great failures, but that never stops him or his employees from working hard and constantly growing. Similarly, when you invest your money, you are sure to make both profits and losses. It's important to stay calm and not lose your head when investing. If you make profits, you shouldn't get too optimistic. Similarly, if you make losses, it's important not to get too pessimistic. The key is consistency when it comes to investing. Number 12. If money isn't everything, work at McDonald's. This may be a bit harsh, but this is the extent to which Belfort idolizes money in The Wolf of Wall Street. He says money is everything in life, and we understand that things for him are always extreme, and they never take a middle road. While it is important to know when to hit high and when to take the middle road, therefore, while investing your money, it's crucial to develop the correct sensibilities and understand what will work when. In conclusion, it's safe to say that The Wolf of Wall Street taught a whole generation about money and its importance. While the movie is surely extreme in its messaging, it's important to learn what the makers want us to learn. A scene from the final scene, when Belfort becomes a public speaker and advises people on how to invest and use money legally and judiciously. What is the most important thing you learned in the movie? Let us know in the comments below.